I'm going to start here with Target, which engages in operations and ownership of general merchandise storage. Now, they reported earnings today. Their earnings were terrible and they missed, and the stock is down 21.14% on the day, and they're pretty much down. So if you take a look at year to date, they're also down on the year. So if we put about it in January, it would be down 47%, and on a year, you're down minus 5%. So let's talk about the earnings. So corporate sales increased by 0.3%, driven by 2.4% rise in guest traffic and 10.8% growth in digital sales. Growth margin rate slight decline of, 27.2% from 27.4% last year, primarily due to higher digital fulfillment and supply chain costs. So the total revenue grew 1.1% from 25.7 billion. Earnings per share, GAAP and adjusted EPS of $1.85. That is earnings per share, down from the 2.1 in the previous year. So the outlook for the Target company, they expect to be pretty much flat. Comparable sales and EPS and range of $1.85 and $2.45 for the fourth quarter. So pretty weak report from Target. Their forecast analysts predict Target's earnings and revenue to grow by 5% and 2.8% per annum, respectively, with the EPS growth of 6.5% per annum. So pretty much awful for Target. Target's performance reflects a balance between growth in digital sales and challenges in maintaining margins. Of course, the increases in guest traffic and digital sales highlights the company's successful efforts in enhancing customer engagement and online presence. However, the slight decline in growth margin indicates ongoing pressures from higher fulfillment and, of course, supply chain costs. So looking ahead, Target continuous outlook suggests a focus on stabilizing performance aimed at a competitive retail environment. So let's do here a risk analysis for Target. Should you buy this stock at the current price? Do not forget they are one of the dividend kings. They yield a 2.87% dividend for the entire year. The EPS is 9.71, which is great. So let's do a couple of calculations. The PE is currently at 16.11. I don't know if this is already adjusted, because if we take our 1.24, let's do here a quick calculation. A PE of a price of $124 a share divided by the EPS of 9.71, going to get a 12.78 PE. So this is a really, really good PE. So I'm going to say here PE up in 78, which is less than even the 15, because this is not a growth stock. So 15 PE, and it's, I would say, a low risk right now for Target at its current price of $124. Now let's continue on. They have triggered their RSI is currently, and this is a 1 year chart, okay? This is a 1 year chart. Their RSI is at 24.88, which is a very low risk. And if it goes lower, it's less than 30. We're going to add disk, then we're going to add this. Then the MACD sell wrong. So once again, a low risk, but the outlook, let's just say if we would go here, let's say their forecast, they're forecasting, most of the analysts forecast, a above market return of 43%. So we're going to say that this is a outlook 43% growth year to year, and this is above the average of 8% of what we are looking for. I'm going to say that this is a very low risk currently. Okay, so we are at 15% risk. Is this affected by global or geopolitical problems? Mostly not. This stock is very, very overbought today. Is this a long-term investment? Is this a trade opportunity? I would say yes to both. Now, Target does all-time high. Now, Target is basically roughly at 50% of its all-time high. Remember, so it's $267 and it's at 120 feet up. It is even under it's even under 50% of its all-time. Could it go further down? Possibly, but at this current price, Target is a bargain. I would say all metrics point into a buy signal for Target for even a short-term trade, or even maybe a long-term investment. But you know what? Let me hear your thoughts. What do you think about Target? Is it buy? Is it sell? Leave it in the comment section below. Don't forget to like, share, and subscribe to the channel. Also, click that notification bell in order to get notified when we post new videos. We post Monday to Fridays. And of course, on the weekends, we do our portfolio review with what we bought, what we sold, why we did it. Being said, catch you next time. Bye-bye.